Hello and good morning, ladies and gentlemen. Now, it would mean the world to me before we watch this video, before we get into this, you guys like and subscribe. Watch the full video. Subscription is important. It's vital. I'm getting all these views. I need the subscriptions because you guys can subscribe to great information multiple times a week on trades that I'm making, trades that I predict, and where I believe the market's going. I could tell you right now, the predictions I've been making in the first 8 episodes, a lot of them have been coming true. So we're going to bet on this one that I'm about to show you coming true as well. And this is a trade that I will be making when the market opens tomorrow morning. This is silver, my favorite asset in the world. And I've been talking about how I believe it's going to go down. And I'm finally going to take action on the trade and short it. I will be buying a stock called ZSL. It's a bearish leveraged silver ETF, so every time silver goes down 1%, that stock goes up 2%. Let's see, why am I doing that? Simple. We have a bunch of indicators lining up. We have QQE signals saying short. We have bearish divergence, so silver makes higher highs as the RSI continues to make lower lows in a downtrend. We have a red MACD. This is how you trade, guys. And it's in a channel, so odds are it breaks out of that channel to the downside. It's also in a chop block, and it has been for a week or so. Yeah, since December 22nd, it's been in this chop block. This is how you trade, guys. So my thesis is that I'm going to bet on it breaking out to the downside of that chop block because most indicators are indicating downside compared to upside. If I had to get an exit plan, if I were you guys and you want to join in on this trade, stop loss when it breaks this white line, because as you can see, this was a point of resistance there. Realistically, you could even wait for it to possibly hit that white line before you short it, so you can short it for even cheaper. But it's up to you guys. Do your own analysis, do your own research. I'm going to short it, and I might sell when it hits this point of support, or when it tests the 30-day moving average, and they could be around the same level. Right now they are. So we'll see, guys. Keep an eye on that. Keep an eye on silver. I'd be going short here. Crude oil. I was actually debating on going long on crude, but I'm going to wait it out just because it's currently fighting a key level, and I want to see if it can break it. Obviously, this was a point of support here. This range is also a point of resistance. We have bullish divergence on the RSI, so that's good. Long QQE signal and green MACD. So if I had to guess, I'm guessing it's going to go up. The only reason I'm going with silver instead of crude is because it looks like a better trade in my opinion. More certain and better risk to reward ratio. So crude is also one you guys can look into. I think crude going up is a good trade right now. S&P 500, I have it on the weekly chart because it gives you a new perspective. Like this, I don't know. Like when it comes to the stock equities, the stock indexes, the S&P 500, Dow Jones, and the NASDAQ, I'm pretty neutral right now. But this weekly chart looks pretty bullish. 2 hammer candles, which is bullish. Green MACD, bullish. And we have QQE signals telling us to go long. So, like when you look at it on the daily, and I'm going to show you QQQ on the daily right now, there's signs that it could be bearish. But this, guys, you have to see SPY break below like 360 before we can confirm anything. And it's not. And maybe if we get enough, maybe if this week is red, QQE signals will be red and MACD flips red. And I want you to keep an eye on that, because if that happens, you can bet on a lot more red coming for the S&P 500 for all 3 indexes, because they all relatively follow each other. Now let's look at the NASDAQ on the daily. We're kind of still in this 260, 270 chop block, so you got to wait for this area. And if it breaks below this area, if it breaks this low right here. And make sure you guys make sure you see confirmation, okay? Use your ATR indicators. Make sure you see a full candle below this red line before you initiate on your trades. Guys, discipline is everything. Don't act with how do I say this? Emotion. think rationally, okay? Make sure, like, we could have acted with emotion when Apple was down here and say, oh, it broke the neckline, let's short. No, guys. You wait for confirmation, and that was a fake. So make sure you stay disciplined. Discipline is everything in this game. If you're learning the charts isn't the hard part. The hard part is being more disciplined than the guy you're going up against. Okay, guys, discipline is key. So discipline yourself. Maybe if you see it go down here, and you see some rejection, and you see some signals start to turn long, you see QQE turn green, you see the MACD turn green, you find some bullish divergence on the RSI, and you see it stop out at 254, then go for it. Go long. I think that would be an amazing trade, guys. TQQQ is a 3x leverage ETF, and that's even more money than you'd get in a 2x. This is how you trade, guys. This is how you become successful and make profits, okay? Anyways, 10-year yield. Okay, I told you guys to short the bond market and go long on yields around here. Worked out pretty well. And we have bullish divergence on the RSI still. Green MACD. However, I don't know where it's going to act up on here. Hopefully, we can get a clear trade in this chop block. Hopefully, it keeps chopping. And I doubt this is going to happen. We get some clear signal. But I wouldn't be touching this bond market until I see a clear signal that the yields are going to go down and the bonds are going to go up. Because I'm not worried about chasing this anymore. Let this thing do its thing. When I see QQE signals show me short, when I see this RSI get a little bit overbought, maybe a bit of bearish divergence, and a red MACD, then I'll look into going long on TLT and shorting the yields, because that is a good trade I can get behind. But right now, I'm not worried about going long on the 10-year yield. I told you guys to do it here. That's when it was a good trade. We had a double bottom. Now, it's pretty uncertain in my opinion, and I want to see it break out of this range before I can even say anything's going to be long. But hopefully we can see it hit this 4% range, which is what I think is going to happen. And we'll start getting some short signals there. But we'll keep an eye on that. Obviously, this is a very important stock, not only for technical analysis, but the American economy. It's not a stock, sorry guys, it's a security. And this yield, the higher it goes, the more doom and gloom we see for the American economy. It's extremely important, and the average person has no clue what it is. Apple, once again, I want you guys to keep an eye on Apple. From a trading standpoint, unless we capitulate, I'm waiting for a point to go long here, because this was a strong rejection. It could end up going down, and guys, if it goes down, we have our money in cash. We don't need to worry about it. Watch it. When you have your money in cash, you're not losing anything. Stay disciplined. There is no clear signal on what to do with Apple right now. Stay disciplined. I'm not touching Apple. If anything, I'm definitely not going short. Well, we have short here. We're below the 30-day moving average, and we have a red MACD. But look how low the RSI is. What's the risk-to-reward ratio for you? The turnaround will be coming soon. It could form a double bottom for all we know. I'm not touching that right now. If you want to, like I showed you guys in the beginning of the video, a much safer trade, in my opinion, not financial advice, is silver shorting. It's just the beginning of this, the beginning of the red MACD, and bearish divergence. If you're asking me, I'm taking this trade over Apple any day of the week. Stay disciplined. Sometimes staying in cash is your best idea. And you got to wait for the good trades. And that's why you guys subscribe to me, because I'll tell you where I see it. And you can put your own insight into it and do whatever you want. Now let's hop on to the news, guys. S&P 500 wraps up worst year since 2008, and investor confidence is low. Only one sector of the S&P recorded a gain in 2022, and I believe that's probably energy. The three major U.S. stock indices are targeting their worst annual performance since 2008, with the S&P 500 just getting over 20% in 2022. So that puts it in bear market territory, guys. Stocks fell on Friday as growth shares dipped in the final trading session of a year marked. So I told you guys this is going to happen. This is what they're going to do, okay? Stocks fell on Friday as growth shares dipped in final trading session of a year marked by aggressive interest rates to curb inflation, recession fears, the Russia-Ukraine war, and rising concerns over COVID-19 cases in China. The mainstream propaganda ministry will have you believe that this is all because of, first of all, yes, interest rate hikes to curb inflation. That's big. Okay, that's big. The reason the inflation is there, and that's not in this article, is because the Federal Reserve is corrupt and want the rich to get richer and the middle class to disappear. And that's not going to be in this article. The Russia-Ukraine war is a proxy war. That's bullshit. It's simply there for the U.S. to create more economic stimulus because the U.S. loves poking bears. They want this war. They need a scapegoat so they can print more money. They need to inflate from to infinity and beyond, and they don't want you blaming. Like, look, this article should just say stocks fell on Friday as growth shares dipped in final trading session of a year marked by aggressive interest rate hikes to curb inflation, and all this is the Federal Reserve's fault, and done. Point blank period. The article could have just ended there, and that would have been more truthful. The housing market has really slowed down, and values of people's homes have declined off of highs earlier this year. Yeah, the housing market is definitely taking a dip. We're actually going to get into that in this article. U.S. suffering right now from there you go. U.S. suffering from the second biggest home price correction of the post-World War II era. Obviously, the biggest home price correction was 2008. But what we're seeing right now is looking exactly like how 2007 looked. The default rates are going up. Housing prices are going down. Yeah, like me and my friends that are shorting markets right now feel like Dr. Michael Burry. Feel like Jared Venner right now. You guys need to watch that movie, The Big Short. And everything, that movie will challenge you. You're going to hear some things in that movie that you might not understand. You have to learn, guys. The U.S. housing market is experiencing its second biggest home price correction in the post-World War II era. I think 2023 will be the biggest home price correction of the post